So I just wanted to get a moment and talk to everyone about interest rates. They've been going up, and I brought in an expert today. Her name's Amanda Rea. She's been with Guild for almost 10 years. Last year, she closed 393 loans. That's more than one a day. Also, since 2015, she's been in the top 1% of loan officers in the US. And last year, she won the Chairman's Club Award for Guild. And she's going to help us out with understanding where rates are going right now. So, Amanda, just wanted to know, where are interest rates today?
Yes, and thank you for that introduction. I appreciate that. So
Absolutely.
where are rates? That's kind of not a completely black and white question. Of course, it depends on the type of loan you're getting. If it's FHA, VA, conventional, USDA, it depends on your credit score, how much you're putting down. There's also a lot of different interest rates that are available to anybody. So I'm going to kind of give you a range. Like today, you can pretty much get an interest rate anywhere from 3 to 4.625%, but the average is about 3.99.
3.99. Okay.
Yes.
Okay. Well, that's definitely higher than it was last year. I think they were closer to what, 3.25 by
Yeah,
December. Is that correct?
yeah, that's right.
Okay. So what's changed since last December to now?
There's really three main things that are impacting on what's going on with interest rates right now. So the first thing, once COVID started, our economy was in a really steep, short, but a really steep recession. So
Hmm.
the Federal Reserve stepped in. They started buying a ton of mortgage-backed securities. That was
Okay.
keeping interest rates artificially low. Like they should not have been that low, but the Fed was putting so much money into the mortgage industry to make sure it didn't crash, make sure the housing market didn't crash. So they're using the word tapering. They're buying less mortgage-backed securities now than they were last year. And eventually they're going to stop buying them. So that's causing interest rates to go up. The other thing is inflation. We're at like, 39-year record high inflation right now.
Hmm.
And so when inflation is high, interest rates will go up. Think like
Okay.
if inflation is 4% a year and you're paying interest at 4% a year, you're collecting interest at 4% a year, you're really not making any money. So when inflation is high, interest rates will go up. And then the other thing is just the economy is in general. The economy is doing really well right now. And when the economy does good, interest rates always go up. So those are the three main things. And all three of them are happening at once. So it's making rates go up quicker than they normally would.
Wow. Wow. Okay. That makes sense. So right now, you know, last December, if I had people looking, they were looking around 3.25, and now we're around 4%.
Mhm.
It doesn't sound like a huge jump. How's that going to affect somebody if they're looking for a home?
Yeah, I wanted to share something with you. So of
Okay.
course, the better the interest rate, the lower the interest rate, the lower your mortgage payment's going to be, which is why everybody wants a really low rate.
Yeah.
So this is what I created just to kind of show some historical numbers. I'll walk you through this, Josh.
Okay.
So I put the price of the house at 545,000 because that is the median house price right now in Reno and Sparks. So in all these scenarios, the house price is 545,000. I picked an interest rate of 2.875 to start. So if you would have bought, not this last December, but December before that, December of 2020,
Hmm.
2.875 is about the interest rate that you would have gotten. If you would have bought December like a month ago, your interest rate would be about 3.375 or 3.25, like you said. Today's interest rate is 3.9. And I said, what if interest rates went up to 4.5? Well, you can see how the payment changes with all of these.
Okay.
What this shows is if I would have bought when my interest rate was 2.875, my payment would be $320 a month cheaper than it is now. If I would have bought a month ago, my payment would be $179 a month cheaper than it is right now. But if I wait until interest rates are 4.5, my payment's going to be $154 a month higher than it is right now.
Okay. So basically, if I would have bought the same priced home 2 Decembers ago, my payment would be $320 less.
Yeah,
That's pretty significant.
I know. We looked at the savings over time. If
Hmm.
I would have bought then, I would have saved $41,000 in interest over 60 months, 5 years.
Oh,
which
wow.
we can't look back. Of course, we can only look forward, right? So
Hmm.
this just shows an example of how much interest I would pay over 15 years. So this column where it says 277,000, that's if I bought right now at a rate of 3.9.
So,
If
I'm seeing that, according to NAR, most people are staying in their homes between 9 and 10 years before they sell again. So that's pretty close. That's a lot of money to be paying over 10 years, couple $100,000.
Right, yeah, but the difference, if I wait, I'm gonna, instead of spending 277,000 interest, it's gonna be 314 if I wait until the rate goes to 4.5.
Jeez, that's a lot. So, okay, that makes sense. I mean, it looks like it is pretty significant, even though the numbers are small. 3.25 to 4%. It seems
Right.
small, but it's quite a bit. Um, so I get that the payments going to go up. I'm looking at a $550,000 home. That's what the median price is in Reno right now. And I get that my payment's going to go up. How's that going to affect me otherwise? Is it going to affect what I can borrow?
Yeah, absolutely. This is what's so tough when rates go up. People that I had pre-approved maybe a couple months ago, when rates go up, now all of a sudden they qualify for less. So I
Hmm.
did want to show how that affects what people qualify for. So here's an example that I did, Josh. I said, okay, so this first column is today.
Okay.
You bought a $545,000 house. Your interest rate is 3.99. In this scenario, somebody was putting down 5%. Their monthly payment with their taxes, their insurance, their mortgage insurance was going to be $29.61. Well, I said, what if your rate went from 3.9 to 4.5? That's the middle column. You'll
Okay.
notice the exact same payment, but now instead of being able to get a $545,000 house, you can only buy a $517,000 house for the exact same payment.
Okay.
And then what if you wait until rates go up 1% from now? So instead of 4.5, this final column shows if your interest rate was 5%. Again, the exact same payment, but now you're buying a $492,000 house instead of today, a $545,000 house. So as the rate goes up, the amount you can buy, the house price, goes down.
So, and that's basically because we're looking at what we call a debt to income ratio and how much that we can be approved for on a monthly basis. That I think that's a misnomer out there. A lot of people think, oh, I'm approved for a certain amount, but really what you're looking at is how much can you pay every month without breaking the bank, basically. Is
Well, yeah,
that?
I mean, even if you just think about like your real life, like if
Hmm.
interest rates go up and the house price goes up and your payment goes up, it doesn't mean you can just magically afford more. Like your income
Right.
doesn't go up.
Absolutely, absolutely. So that makes a lot of sense. And so where I see issues with people is like with people I'm trying to help out is they are looking at that $550,000 home. They're right at the top of their amount. They're a little bit timid about putting down offers, or they're worried about competing with other people. And then the interest rates go up, and now they can only afford something in the 515 or maybe even 495 range, and the prices are still going up. And as a realtor, based on what I'm seeing with our low inventory levels, I don't see those prices going down anytime soon. We're actually, a lot of people are expecting between 4 and 7% appreciation over this next year.
Right.
That being said, this is kind of where I see, here's the interest rates, and here's the people who want to buy, and the prices and everything just kind of gets pushed away. And this is how buyers get pushed out of our market. And it happens really quick when interest rates start moving.
Yeah.
Um, so when we talk about 4%, though, 4% is a high number that we haven't talked about in a couple of years. Um, is it a good idea to just wait and see if interest rates go down?
So I I heard somebody get asked this question the other day, and I really liked how he answered, because he was saying that buyers are saying maybe I should wait until interest rates get back to normal,
Hmm.
right? Like 3% is normal. He's like, there's nothing normal about what's been going on with interest rates or in our country for the last couple of years. Like nothing was normal.
Right.
So I wanted to share this. This is just from, can you see this?
Yeah, I could see
Okay,
that.
so this is just historical interest rates starting in 2000. So pretty much for the last 22 years.
Okay.
And you can see back then they were 8%, then they were in the sixes, and then they dropped below 4. But if I look at every single year and I look at the dots, there's only been really like 4, maybe 5 years in the last 22 years that interest rates were below 4%. So like they might go back down to that. Sure, we don't know. But if you look at it, there's more years that were above 4% than there were that were below 4%.
Oh, so that definitely shows why a lot of people have been taking advantage of buying homes right now.
Well, yeah,
Uh,
and it's like if you buy, say you buy and your rate's 4%, and then the
uh-huh.
rate goes back down to 3, you can
Okay.
refinance. You
Okay.
can
Yeah.
take, like, you're not going to be worse off. You're going to be happy if the rates go up, and if they go down, you'll be happy too, because then you just refinance your loan.
That makes sense. That makes sense. So here's my next question, and this is kind of what's going through my mind. I got a lot of people looking at buying stuff. I hear the questions. Okay, rates have gone up. My payment's going to be higher. What can I do to lower that payment?
There's a couple of different ways that you can lower your payment. So usually when we talk about changing your monthly payment, there's one of like 2 things that you can do. One, you can put more money down, of course. But the other thing you can do is you can buy down your interest rate. So, the
Hmm.
first question you asked me, what are interest rates? And I said they're anywhere from 3 to 4.625%.
Yeah.
Any buyer can choose any of those interest rates. You're not just going to get offered one interest rate by your lender. They'll give you a range of interest rates, and you can pick out whatever one you want. But how it works, the lower the interest rate, the higher your closing costs. So it's
Okay.
called paying points. You can pay extra money now to buy a lower interest rate over the life of the loan.
Okay. Now, if
Anybody has that opportunity. Every single buyer has that opportunity. No matter who you are, what lender you work through, you can always pay extra money to buy a lower interest rate.
okay, so I can come to the table with just some extra money, and it can lower the interest rate, like from a 4 to maybe a 3.75 or something like that.
Absolutely, always.
Oh, okay. Okay. What do points usually cost? Is that standard, or does it just depend?
Yeah, it really just depends. But 1 point is 1% of your loan amount. So say you were borrowing $400,000 and you wanted to pay 1 point, that would cost you 4 grand.
Okay.
1 point doesn't lower your interest rate 1%.
Okay.
1 point might lower your interest rate like 1/4%.
It seems like based on what you showed us, though, 1/4% is pretty significant.
Well, here's what's really interesting, and I wish I remembered the exact numbers, but I met with a client the other day for his pre-approval, and he's like, what if I put an extra 20 grand down? What will that do?
Okay.
So we looked at it, and I think it was gonna, I don't even remember how much it was gonna save him, but then he's like, what if I bought down my interest rate instead? So I just put down the minimum and I bought down my interest rate. Well, him spending $5,000 to buy down his interest rate did the exact same thing as putting $20,000 down.
Oh, wow.
You can actually spend less money by buying down your interest rate and get like the same results as putting quite a bit more money down usually.
That's pretty good. That's a good way to look at it. So, well, let's talk a little bit about this. If I'm looking for a home this year, and need to get a mortgage, what would be your best advice right now?
Like to get started.
Well, yeah, like, if I'm looking at homes right now, and I want to get a mortgage, like, what is your best advice right now? Should we get pre-approved right away? Um,
Mhm.
is looking at points the way to go, which it sounds like it is. What are some of the things that we should be doing?
Yeah, if you want to buy a house, you should definitely talk to a lender sooner rather than later. Some
Okay.
people want to wait until like right when they're in a lease or something, and then they wait until like they have 2 weeks left, and then they come in and see us, and you know how that goes.
Yeah, for sure.
If you're not quite ready to buy and you talk to me or talk to any lender, they're going to give you a plan. So even if you're not ready this second, but you want to make sure that you're ready, I have
Okay.
clients that want to buy this summer and they're starting to talk to me now just to make sure, how much they qualify for so they're looking in the right price range. They want to make sure there's nothing they need to fix on their credit. They want to make sure they have enough money saved up. Just want to make sure when it's time for them to buy this summer, there's not going to be any snags. So
Okay.
always sooner, the sooner the better.
Oh, that sounds good. And talking about snags, something that could be a snag is interest rates even going higher. Do you have any idea where interest rates are going to be going this year?
I'll share with you the predictions of the Mortgage Bankers Association. This
Okay.
is These are their predictions for interest rates. So in 2020, we talked about that rates were like 2.8, last year like 3.1. Their prediction at the beginning of the year is that rates would be 4% in 2020, which they are. I don't think
Hmm.
anyone knew it would happen in like the first couple of weeks of the year, but that's the prediction, is that rates are going to be about 4% this year. And then in the next 2 years, you can see that the Mortgage Bankers Association predicts that rates are going to go to 4.3%.
So
So
they're
they're not predicting rates to go down over the next couple of years.
okay, and they're kind of expecting it to kind of hover there. It looks like.
Yeah, which means it doesn't look like it's going to jump a ton. But again, who knows? Surprises happen
Hmm.
all the time. But those are the predictions as of right now.
Okay. Okay. Well, I really appreciate you taking the time to talk to me about all this stuff. I'm going to send this out, and if there's people who want to get a hold of you, what's the best way to do so?
So the best way, which I'll send all my information for you to share out, is by phone at 775-345-3155, or you
Hmm.
can email me at area@guildmortgage.net.
Awesome. Awesome. Again, I appreciate you coming and talking to me about this. I hope that it's helpful for everyone who sees it, and I appreciate your time.
Yeah, thank you so much, Josh.
Absolutely.